based on a relatively strong job market. American consumers are continuing to spend strongly, contrary to the initial expectation that consumption would slow down at the end of the year. Consumers were found to be spending solidly. Strong consumption indicators leave room for upward pressure on prices and may cause the Federal Reserve to hesitate to cut interest rates. Accordingly, expectations for an early interest rate cut by Federal Reserve are also decreasing. The outlook at the U.S. Federal Reserve FED will not rush to cut interest rates has strengthened. The market is reacting as expectations of the Federal Reserve's interest rate cut are being reset. Retail sales in December 2023 weighed on expectations of an early interest rate cut from the Federal Reserve. The U.S. Department of Commerce announced that retail sales in December last year reached $709.9 billion, up 0.6% from the previous month. This is a result that exceeds the expectations of experts who expected an increase of 0.4%, which was predicted by the Wall Street Journal. WSJ monthly retail sales are statistics on product sales performance among total consumption and also an indicator of changes in consumption in the U.S. economy. This figure exceeds the 0.4% increase and was twice as large as the previous month's figure, 0.3% increase. Given that U.S. consumption accounts for 2/3 of gross domestic products, GDP, strong consumption means that the U.S. economy is still maintaining strong growth. At the same time, expectations of interest rates cut by central banks in major countries have receded. After those predictions that the Federal Reserve would cut interest rates 6 or 7 times starting in March, markets are starting to realize that there is little chance of that happening and that a rate cut will be more orderly in the second half of the year. In the released Beige Book, the Federal Reserve said that signs of hiring slowdown have appeared in most of its 12 jurisdictions since the end of last year. This includes an increase in applicants for employment, a decline in turnover rate, selective hiring by companies, and easing upward pressure on wages.